It's the buyer's auction to lose after OPEX and FOMC. This is for the week of September 22nd, 2024. We're going to look at markets in profile and look for potential opportunities around the NASDAQ, ES, Russell, and crude oil futures, using primarily profiling as the key analysis tool to help us organize the auction and price data so that we can make better decisions about where we want to express playbook trades. My name is Josh. I'm the founder of TRADEWITHPROFILE. We're a skill development firm, and we use the profile as a way to organize the auction and really understand that not every price is actionable, and so we can find those prices that are more significant to the auction and make better decisions as a result of that. And so with that, let's get started looking at the week ahead and how we were last week, what we're looking for this week. We're going to start with the S&P. Key kind of takeaway last week was the idea that we came into FOMC balanced, had a big move off of that, even though it was neutral. So we took out IB high, IB low, looked vulnerable to the downside, but ultimately what we saw is that buyers were able to hold above 5,700, and we've held that since. And in fact, this is the trailing VWAP from FOMC. You can see that we're still holding that. This is what I mean by it's a buyer's auction to lose. We've had higher prices from both of these events, and yet we need to be able to continue to sustain those prices or risk the opportunity of failure. So, one of the key things that I would say this week is if we get back below 5,700, that would be dangerous if we can accept below 5,700 for buyers. Let's take a look at the longer term chart and just get an idea of kind of where we are and what that looks like in terms of an expectation. And also let's start by looking at the a monthly chart before we press on to smaller time frames. Okay, where are we specifically? So we have near-term value has migrated up here around 5770, but you can see that all-important 5700. That's 20-day, 90-day value. Overall for the month, value for the month still remains significantly lower. So if we were to fail below 5700, we could make a beeline back toward that price around 5600. But as long as we can hold 5770, we're looking to the upside. Actually, this week we're close to potentially 5,900 is the expected high of the week, as long as we continue to hold above 5,770. So where are we getting that information is we'll go look at the quick sheet, which you can download from this video, and you can see our weekly expected ranges: 200 points, 58.98 weekly expected high, 56.14 to the low. We have a bullish posture, even though we had neutral on Friday. Key price to watch this week is going to be 56.98 or 5,700. All right, so if we're above that, we're looking to be in the right direction. Now, specifically on Monday, and then for the week, how we're looking to play that in early pullbacks that can't break 5,700 would be bullish. If we push higher early, what that's going to do is that's going to stretch out the inventory and then look for failure later in the week. We do have Powell speaking this week, so be mindful of that. And then if we could break and hold below 5,700, then that's where we can start to see movement lower towards the weekly expected low and back towards 5,600. Okay. As we look at Monday, 5770 will be the key reference. Sellers did not get paid after OPEX despite the neutral activity. So as long as we're above 5745, we're looking for higher prices toward last week's high and up toward our daily expected high around 5820 for Monday. If we were able to accept below 5750, we could make a move back to 5700. Opening range, we're going to look for a tag of 5760 and then push higher if we gap. So if we have a gap open, look for that gap to hold to push straight to 5820. If we're able to fail, we're going to go back right down here to 5770. And again, if we fail below 5755, that would push us back in this direction. All right. One other thing to look at as we look at where we are in the SPY is to look at what the VIX curve looks like and how are participants hedged around this. We're looking at the SPY. This is the 5600. Let's equate that to 560. Let's equate that to 5700 of the ES futures. We can see the new all-time high, and we are post FOMC, post OPEX, and complacent. What does that mean? That means that the nearest term options are cheaper than longer term. That's a measure of there being really no fear. But markets find tops when they are complacent. They find bottoms when they are fearful. As you'll note back here, when we found this bottom, we had a pinch in the curve as participants got inverted and a little fearful. Back here, we're complacent, and the complacency is what breeds a little bit of complacency back here. It breeds either sideways action or to the downside as we look to hedge up. As we look further down the calendar, aside from PCE this week, we also have the election that will become more in focus. So be mindful of that. But really, all you got to remember is that price. We stay north of that, no sweat. that's all it is. All right. With that, let's go look at the NASDAQ and get an idea there. Pretty similar picture in the NASDAQ as far as where we're going, although the NASDAQ has not quite made new all-time highs. Let's look at the monthly chart here. We're still inside for the month in September, so look for an assault at the August highs. Key upside reference, though, is that 20,200. That is 90-day value, so expect a little bit of pause as they try to break that. If we can break above that, then we could push toward the weekly expected high at 20,413. We could really run away towards 20,800, so we'll have to watch that. However, we did not pull near-term value up with us at the end of last week, and so that sets us in a stage where we're likely to balance here. But similarly, we're still above the FOMC release, which was back here. So the key reference, 19,700, we need to hold in the NASDAQ for the buyers to continue to pursue, and then they could really get going if they can break out and accept above 20,200. If we were to fail, that's the magnet, and if we can get below 19,700, then we have 19,200, and real slippage would go towards 18,900 if we were to really get an opportunity to push. Again, for the week, 20,413 is the expected high, and we've got a significant level up here at 20,500. To the downside, 19,700 is your key reference. What are we looking for on Monday? Okay. Post OPEX, sellers were not getting paid. That's what you can see in the profile. Anytime you see a 45 degree in the profile, sellers were not getting paid. So our key reference, 20,022 is going to be kind of the key pivot on Monday. Above that, we should make new weekly highs and take out that and test that all-important 20,200. And if we reject there, that's going to take us back to the 20,022. If we were to get below that, we have kind of a key low volume area here, right around 19,950. If that fails, that opens the door to push back toward 19,700. Again, we're trailing that FOMC VWAP. As long as we hold that, we're higher. But if we go back through the scene of FOMC, that opens the door to the downside. So if we open in range, look for buyers to step in and push higher. Gaps, look for 20,200 and higher if they can accept above that, or rejection back to 2022. And then below 950, we could open the door in that direction. So that's kind of our key idea for Monday in the NASDAQ. Look at the Russell real quick. Okay, for the week, did a really good job of accepting value higher, and now have a key reference that's both 5 and 20-day value right here at 2220. Is that right? Yep. For the month, also like the NASDAQ, pretty much an inside month from August. If we can hold above 2230, should be able to make new monthly highs and push towards new highs from this macro break from balance, right? So 2230, key for the auction to hold to continue to progress higher. So that's what we're going to be looking for this week. Early pullbacks into here, look for buyers to step in. Now, if they can fail below that, then we've got monthly VWAP 2187 would be significant, and that could revert us back this way or fail all the way back and start working back towards 90-day value. It is not lost on me that we have pushed up in here and found sellers that have knocked us down. So we are moving towards areas where we've had sellers step up. So 2300 expected weekly high, 2200 weekly expected low, about 100 points. For Monday, as we start the week, you'll see very similar to the ES and the NASDAQ. Balanced on Friday on OPEX, we've got 2250. There's a little node here. That's where the volume was to watch. That's key. But above that, we'll look for the auction to push up toward 2262 and push for new weekly highs. We'll try to eat into these sellers up here. But below that, it's back to the scene of FOMC. So this was the FOMC day. And then see if buyers step in. Again, if buyers fail there, then that opens the door to prices lower. And then finally, let's look at crude oil, who has done a good job of kind of coming off the lows. So we were in this large range back here. We've tested a couple weeks down, and now we're right back in here to make a decision of can we get back into that higher range. So 71 is going to be key to the auction this week. 71.68, you can see there's a low volume area that's been an area of rejection. If we can break above that, we'll start looking towards 72, 74, and move back towards those references. Looking at the longer term chart, where your bigger magnets are is 73, and then also the most traded price around 75 from last month. What's key to the auction is that we hold above 69. So the auction could push like this week. We don't want to see anything below 69, or could also push in this direction, as we have that easily within the weekly expected high, as well as a tag down here as the weekly expected low. So those are like the really big levels to watch out for, depending on which way we go. Let's look at where the profile ended. We did pull value up, got a couple days of balance here. As long as we're above 70.50, we're looking for new RTH highs. So key reference is going to be 71 on Monday. Above that, we're looking for new RTH highs and push towards 72 and then up towards 72.40, the expected high. If we get below 70.50, then we have a window back here that would tag back towards monthly view up at 69.40. So watch this 2-day area balance. From there, we're looking for moves inside out. Okay, let's do one quick look here at the calendar as we look at the week ahead of us. Let's get to the right calendar here. So we do have quite a bit of Fed speak. Just be mindful that could lead to some movement. So if you see something moving in the middle of the day, you're like, what the heck was that? That's probably some Fed speak. Key will be Powell on Thursday. So this will be like a follow-on from FOMC, but we also have Powell and Treasury Secretary Yellen speaking. So Thursday will be fairly significant. And then that's right before we have PCE, which is the Fed's favorite tool to look at right now. So keep that in mind as we rock and roll in the week ahead. Okay, so that should give us a plan and plenty to look at this week. Let me know what's making sense or not. And we'll be back with our daily outlook to look for Tuesday and the rest of the week as we progress through the week, using the profile to help guide us and make decisions. All right, thanks for watching. We'll talk to you soon. Peace.